Hello, everyone, and welcome to today's No FOMO Charts, Stocks and Crypto TA live stream. Today is Sunday, January 14, 2024. It's January 14, 2024, just after 6:15 p.m. Eastern Standard Time. Here we go. We have a big week coming up. Last week was major for crypto. But in the USA, we have stock market earnings season, which is underway right now, with big banks reporting last Friday. And the stock earnings this week is a continuation of that. So Morgan Stanley, Interactive Brokers, Kinder Morgan, Alcoa, Charles Schwab, Prologis Real Estate, US Bancorp, Fastenal Tech, Travelers Company, and State Street Financial Company, the economic data releases for this week: manufacturing index, retail sales, core retail sales, unemployment claims, and consumer sentiment, as well as other data. The big news for this week: US stock market earnings season continues, officially kicks off with finance companies. The World Economic Forum meetings are all week this week. We have a holiday here in the USA, which is at the time of the stream, Monday, January 15, 2024. It's Martin Luther King Jr. Day. So it's a holiday. Stock market's closed on Monday. The big news for crypto was that the SEC, USA SEC, approved 11 Bitcoin ETFs for trading and investment on stock exchanges. It's taken 1 to 10 years. It's been a long time. Huge amount of time and work. Applause to everyone involved in that. It's great. It gives people access. It's not necessarily about maximizing profits for these ETF funds. It's about global access for investors who don't want to touch cryptocurrency directly. The list is GBTC. These are the 11 Bitcoin ETFs: GBTC, IBIT, ARKB, BITB, BTCO, BTCW, HODL, EasyBC, FBTC, BRRR, and DEFI 11. GBTC used to be a OTC stock, but that got converted into a real ETF. It's pretty interesting. Okay, so let's go ahead and get started. We'll talk about those Bitcoin ETFs in the middle to the end of the stream. We're going to start off with stocks because we have big earnings coming up. It's already kicked off into a big year. We had CES Tech Convention. We have the World Economic Forum this week. And in about 1 to 2 weeks, major tech companies are going to be reporting. And the fact that the market is up here, we're up here right now, we're not down here. There's slightly higher risk for a pullback if the earnings are bad, which we have to watch because that could spill over into crypto. Okay, so let's start off. SPY, S&P 500, we are at a resistance level right now, just below 477, and the support level is 467. The trend line, we've actually lost that daily trend line, and it's been going sideways. There is a potential risk here for a head and shoulders bearish pattern. Watching out for that with the neckline, which is at this bottom yellow line, 467. See if that's going to hit this area as level of support. Now, if I zoom in and Fibonacci retrace to find this, support at 467, 461, 451, and 441 area. So if that happens, that will turn into a downtrend, and then our daily downtrend is lost because we were going in an uptrend. It's turning to consolidation. It's not really that positive right now for the past month. It could turn into a double top. Watch out for that, which could be bearish. So on the NASDAQ chart, on the daily, you can see that we're stuck on this resistance area. And this has an effect on crypto because doesn't this look almost like the crypto chart where it was rally and then big pullback? So this is where crypto, the correlation is splitting. It used to be, I just checked it about a week ago, before the Bitcoin ETFs, for the past 1 year straight, 365 calendar days, Bitcoin was approximately 63% correlation with NASDAQ QQQ. So about 60% correlation, meaning that if NASDAQ goes up, there could be up to a 60% chance that Bitcoin is going to follow that trend. So this is just my personal research, look at the data. So the fact that we're going sideways, it's actually not good. It's not good. And we have tech earnings coming up in 2 weeks. Not good. Right? So the risk is slightly higher. Watch out for that 397 area of level of support, which happens to be the 236 Fibonacci. 397, 385, 376, and 367 area. Because you can see we lost that downtrend. On the weekly, it's almost looking like a double top. Same thing with Bitcoin and crypto, similarly. Watch out for this double top. That could turn to a M. If the full retracement of the M closes, it's going to close down here and at negative 4%, which could be about the 380 level. Something to watch out for there. Dow Jones, you can also see stuck with the resistance. Let's back out in terms of back up here on the chart. We can see we lost that resistance support, which is now resistance. So I'm talking about this. We lost the support, which is now resistance level. Starting to lose momentum. We were going up and now it's starting to plateau and go sideways, stuck below exactly 378. Want to watch out for that. Why? Because it's turning, it could almost be an ascending triangle. So Dow Jones, there's less companies, but at the same time, it feels like we're losing momentum on the chart. If we make a lower high in the price, which is anywhere below 378, we could pull back and pull back significant. Dow Jones has not had a real pullback. And this is why you hear the news talk about FOMO, because anyone trying to enter in long here is, well, where was that person for past 3 months, right? So where was that trader for 3 months? So just want to watch out for that, because this is why on the chart. Let's look at RWM or IWM. This is what I'm talking about for FOMO. Quick example. Relative on this chart, spot A, B, C, or D. Just a quick example test for all traders is which spot is relative low and which spot is relative high if we're looking at sections A to D, right? A to D. These pink lines. Where's the relative high? Where's the relative low? The relative high used to be A. The relative low used to be B. D is our newest high, and C was the middle point. So where as a long do I want to enter? This is how you have to retrain your brain. I have to retrain my brain. Took years to hone the skill. Is as an investor is if I have a 2-to-1 ratio of, let's say, negative 3% stop loss, 6% reward, where on the chart do I want to buy, right? A lot of people, they might start buying either at section D or on the down leg of A. But as an investor, I know to hold on as long as possible and probably enter in right about here or at the bottom or here, 171 or here, somewhere in the B zone, and let that go up. So anybody trying to just jump into the market right now and thinking they're going to get some kind of reward right before earnings, it's very volatile. It's going to be very volatile. So that's why when I look at a chart, it's not random. It is not random, because you can clearly see the resistance at 195 and the support level of the price at 161. Also, I can draw a parallel channel here. And I know that that middle half line is 177 on the Russell 2000. This is the 4th time Russell 2000 has tried to break out. We had 3 supports down here, and it's always retraced back to the middle half line, reversion to the mean. So it's either going to rest here and blast off higher to 236, or we're going to severely pull back to 180. Depends on the earnings as well. This is a weekly chart. On a daily chart as well, you can see a potential head and shoulders at resistance. We just lost that neckline here at 195. What's the measure move of that? Negative 5%. Negative 5% is 184. Two of that takes us back to that middle heart line zone, the half line, the red line. That's why when I saw this, I actually shorted the Russell 2000 on this leg right here in the circle and closed out those shorts. I shorted NASDAQ, I shorted Russell 2000, SP 500, Apple, and Tesla, and I closed all of that last week, and now I'm moving on to next trades, right? So the problem is when people come in too late in the market is like I already shorted and closed it, and they watch, like, let's say somebody watches my stream, maybe gets somewhat influenced by that, and then we got short squeeze out of there, right? So sometimes going green or going red, got to get in earlier than anybody else. That's the key. That's the key. So just some education and knowledge there for people. Just a good reminder for everybody. Okay, GLD as well. We had that nice bounce off of the 187.40 range, and it's stuck below that trend line. So it's still a little bit bearish for me because it's stuck below 190. It needs to really blast off to 192, this upper range here, but it's really stuck between these three resistance lines in terms of here, here, and here, 192, 188, and 183. So I'm not really excited about that at all. The weekly lower high, just really consolidating, going sideways right here. And we want to just see that get stuck below the 191 area. Silver, SLV, and we could see here, look at this large range, the 3 to 6%, right? For example, there's a hammer candle here, and that stop loss survived in that example trade. But it's hesitating at the support level, still bouncing off of that double bottom. So that's what market makers try to do. You see this large 3% range is if I entered here last time, let's say here, that 3% is valid. That 6% target still remains. So the range is still existing there. Just got to watch out for market makers trying to stop people out on that big doji candle. Copper as well, lost that and hit my support levels. Copper is relatively easy to chart. Just chart the weekly resistance, 2430, weekly support, and somewhere in that middle area, we just hit that exactly. Another way to look at this is with Fibonacci, and we almost hit that 50% retrace. So something to look out for there. Starting to lose momentum on the weekly. Copper, very sensitive, and it is correlated with the S&P 500. Now, energy had a little bit of nice moves on energy. Still on US oil, having this upside down inverted head and shoulders, which could go approximately 10%, which is this blue target up here, this X. We're going to see if that breaks or not. And there is a higher low here. Interesting. We might see some moves on that. But the fact that it looks like it's in its weekly 50% range. Let's see if that's true. Or 618. I like that. The 618, if you use this low, it looks like it's right below 618, the 50%. So that's why we're seeing some kind of reaction bounce there. On UNG, on the daily, it's beautiful. We had this wonderful oversold conditions to an overbought conditions, and now we're starting to get that bearish divergence. So I would say to avoid the FOMO on UNG, I mean, honestly, traders and investors can do whatever they want. What am I saying? What am I saying by avoiding FOMO is when we had this relative low, yes, I always say on these energy ETF stocks that sometimes the technicals don't work. This is the one time it actually worked right here, right? You had this low on a weekly. You had this hammer candle. It hit almost a weekly oversold, but we had some momentum and a nice bounce. But now it's so high, right? There was plenty of room to jump into this UNG trade, but personally, I just passed on it. I'm not a huge fan of UNG. Okay, so let's go take a look at XLF. XLF, we'll look at some sector indexes, ETFs here, and we'll go into crypto soon. It's important just to get a lock on what's going on in the market. So XLK, tech stocks, really getting stuck below that resistance. XLC breaking out to new highs. XLRE with this head and shoulders. That's what I'm saying. I'm seeing this a lot. Hesitation in the market, that downside move could be about negative 4% to the downside. 37, 38. XLE is the opposite. XLE with the potential inverted upside down head and shoulders, which basically could go plus 4%. So perhaps maybe I need to short XLF, or excuse me, XLRE, and then maybe long XLE energy. Those names sound very similar, but it's real estate versus energy sector. XLY, a lot of things, right? XLI with the potential. This is what I'm saying. When you have such a strong uptrend and then all of a sudden it goes sideways, it's very obvious there's a problem. Very obvious. Okay, so the fact is we lost the trend line. It's going sideways and there's a head and shoulders with all this blank space right here. That's not good. Not good. XLF, here's XLF. Finance sector, the MACD is already down crossed on that signal line, losing the RSI momentum right here. So might need to short some finance stocks just on that loss of momentum. All right, let's go to crypto now. So TOTAL, crypto market cap. Welcome everybody to crypto section of the stream. 11 Bitcoin ETFs were approved by the SEC for trading and investing, but we had a severe sell-off. So remember, let's address that first. Why do we sell off? Why? Because in stock trading and stock investing, there's this theory called sell the news. What does that mean? By the time a major event reaches the news, it has already been priced into the market, meaning that if something good is going to happen with the approval of Bitcoin ETFs, that rumor happened 3 to 6 months ago. Okay, or the drama was happening for the past 1 year. All of 2023, starting from March 2023, was the drama of SEC. And this is the ending of that story. It's the ending. The approval is not the beginning of the project. The approvals are the end of the project. So therefore, anybody who invested or is trading on the premise that the Bitcoin ETFs are probably going to get approved at some time in the future, it ended because that news broke out and it's official now. That's why we have a sell-off. Also, for technical reasons, we were in a weekly overbought range on all cryptos. And we have a giant shooting star from last year. Unfortunately for the bulls, this is not great because it's going sideways. We're in overbought territory, losing momentum, and the market's not going higher. So what's the most likely direction? It's probably going to pull back. It might not go down to, sub 1 trillion market cap, but like I said, it can easily pull back to 1.4 trillion because this is a weak price pattern, this week. Shooting stars and dojis, that means the market for 3 weeks straight is saying, we don't know what's really going to happen. And you can feel it in the market. So the fact that it's overbought, a little too high, the Bitcoin ETFs, all of them are down plus over negative 5%. And it's because it's almost like the products got launched in this high zone. It would have been a different story, totally different story, if all 11 Bitcoin ETFs were approved 1 year ago, January 2023. Does this make sense? Can you imagine what would have happened? Because Bitcoin was $15,000, $16,000 down here. So if the ETFs were approved down here and all crypto exchanges kind of survived that, we would have had a mega rally. So the ETF approval is happening when the price is high. That's why we're having a sell-off. Also, you could just feel it in the culture right now. Let's just be honest. Do people have money to buy Bitcoin now? The average person, in your country. You just talk to, let's say 5 to 10 average people that you know. Question is, hey, you're going to buy Bitcoin? And they'll probably say, why? Or too expensive. 42,000? No thanks. Or why? I need to buy other things right now. Right? So there was FOMO. You felt it in the market. I felt it in the chat. I felt it in message boards. I felt it online. So that's why, from a lot of experience, is a swing trader, day trader had to lock in their profit here. Investors different. Investors different, because if I'm anticipating high, low, high, higher, low, maybe a higher high after the 1 year after the halving is a different mindset. Hodling is totally different mindset in itself. But watch out for this. Okay, so that's some of the backstory of crypto. Let's get into the TA. So we're on total market cap here. Zoom out. Let's go all the way to pandemic low to pandemic high, which was this 2020 to 2021. Where did we reach? We also reached the 50% Fibonacci retracement area. Now, somebody could say, wait a second, wasn't there this ascending triangle? It's still in play. It's a long-term triangle. It's going to take 1 year to finish this move. 60% should have been the target. We only went about half of that, 50 to 60%, right? So that's why I don't think the move's over. I just think this relative high looks like it's about to be set. Okay? Usually with these ascending triangles, we need to have a stronger back test of the support level, which is 1.2 trillion. Back test that anywhere here in the circle. Back test that, create the next higher low, and let's blast off to next higher high. Probably naturally going to happen. It doesn't look like this month that we're going to get a moon rally, I like to call it, a nonstop parabolic rally. That doesn't seem to be happening. Why did that happen in the pandemic? Because we had a mega crash. Then people in the USA got some stimulus checks about 3 to 6 months after that, or a year after that. And so we also had the halving here in May 2020 as well, right? So our halving for this year is April 22nd, 2024, which is about 3 months away from now. So like I said, for the past 1 or 2 streams is the price, are we going to have a pandemic playbook repeat of some kind of crash? And a lot of FOMO traders, unfortunately, will get liquidated out of the market, and then investors are going to buy all that back, and then we're going to start investing. That's one scenario. It's one scenario that can happen. That's the bullish scenario. The bearish scenario is kind of like 2019, where we're right here, right? So we had this low where Bitcoin fell. Let me go to a Bitcoin chart. I would stay here for a little bit. The entire crypto market crashed back down to about 90 billion. And doesn't this kind of feel like what we just went through? It crashed down and then kind of this like slower rally up, but it didn't really go that high. Why did this stop here? Is because the USA government, former president at that time, had a tweet saying that Bitcoin is basically bad. And I remember massive fear. Remember investors, even their parents of the investors and traders saying, you got to get out of Bitcoin. And then and then it was over. One more or so rally, and then we had a pandemic. Right? So this is what I'm saying is, in the bearish sense, let's just think, what if this is our top of Bitcoin for the entire year? Let's just pretend I'm being bearish. That move, that range, went about 288% in about 200 days, right? Or in the Fibonacci retracement terms, we hit that 618, right? The low to the 2017 high to the 2018 low, we went to the 618. Now, as you fast forward to now, skip the pandemic rally, but fast forward to now, Fibonacci, the 2023 low to 2021 high, and we hit the 618. So if in a bearish sense, it could be the 2019 playbook all over again. We hit this range, exactly. Except this ascending triangle wants me to believe, makes me want to believe it's going to go higher. But I'm just going to point this out to people is you never know. What if it's not going to go up for about 6 months, right? Where else is it going to go? If no one's going to buy, how is it going to go up? So the only way for crypto to keep blasting higher is people need to buy crypto, regardless of the price. It needs to keep blasting higher. But for that to happen, the government regulations right now for many countries is not in the favor of that happening. So most likely scenario, in my opinion, probably we're going to get a pullback. Just some food for thought. Because everyone is always thinking about the mega bullish rally of 2017 and 2020. Because if that happens, it's going to be very obvious. If it's going to be like every day, it's just going to be green. If that happens, it might happen after the halving. Okay. So I just gave two scenarios, a bearish versus a bullish scenario, just to kind of sober up our minds right now, because people, there is a lot of volatility and a lot of people saying like, how can we trade this? Sometimes for crypto, the best trade is no trade. Sometimes if there's extreme volatility. So that's a long-winded explanation, but I like to get thorough like that, prepare myself. So what's happening on the weekly? Getting stuck below that resistance, 1.62 trillion, and stuck between the support of 1.52 trillion. A lot of green open space here, excuse me, a lot of blank open space here, right, for that pullback. High, low, high. Where's our next weekly high or low for the price? Even on a monthly chart, you can see it. High, low. We survived this double top. That was almost bad. High, low, higher, high. Okay, where's our higher low? It's got to pull back if it's going to be natural. Okay, it's just unfortunate that it has to do that. So now we come to Bitcoin. Now you kind of have that backstory understanding of why did it stop here? We have a perfect resistance to the left side of Bitcoin, right below $49,000 Bitcoin. We have the trend line on the bottom side. This is blank open support space. If I close that top, there's also blank open space for the price to fall down. Okay, anywhere here between 40,000 to 30,000, average 35,000 is our next level of support. Now, if I'm talking about very, very long term, we'll go on our weekly and we'll go to, let's say, BLX chart like I showed last time. BLX chart, we're coming up on that fourth halving, but if you go on a logarithmic scale and connect all the dots here, it's meaning support, we are literally riding that 10 years line trend line in the yellow. Can you guys see that? There is also the resistance on the top side. We can draw it like this. There's multiple here, but the most recent highs are these two. So in terms of the yellow triangle, we're trying to survive. On this long-term weekly, the price looks like it's in the early stages of almost like a 2016, possibly, right? Doesn't it look very similar? 2016 price versus 2023 price. So after the halving 6 months, 1 year from now, I hope that we're going to get this mega rally, because if we're all clear, meaning government's not going to interfere with crypto anymore, as long as it's mostly Bitcoin over Ethereum, or maybe even Ripple, and I'm hoping we get this. What I'm not hoping for the bulls is that we get this very strong pullback. Okay, that's what we don't want, because then that would really test the bottom support here and really, really cause investors to think, okay, maybe this time's not the one, meaning it's not going to rally a lot this time. So that's why I need to see more evidence. It's just stuck in the air right now. It has gone like this, right? High, low, high, low. It's stuck above the support and then blast off. It's a different time 7 years ago. We are in this overbought range as well. It's been overbought before, at 2016. So it pulled back exactly at the second halving spot. Exactly. I just hope the pullback is not severe and then it gets oversold, reset all the technicals, all the algorithms, all the robots, all the people getting hyped on crypto get hyped again. A little bit of this pullback, set the higher low, and then let's blast off to like $80,000 Bitcoin. That's what I want to see. The only thing is, it's only happened halvings 3 times in history. So that's why I'm saying this is the 4th time. We have anywhere between a 0 to 75% chance that 1 year from now, 1.2 years from now, Bitcoin could be in the $100,000 range. If it's not, it'll probably be because of government intervention. So in multiple countries, we're not just talking about USA. If the EU clamps down harder on regulation, if Asia bans more crypto trading, the odds get smaller and smaller every year that happens. If USA kicks Binance out of USA, I mean, anything is possible at this point. So letting the market cool down, in my opinion, is actually okay. It's actually okay. If you got liquidated, sorry about that. Sorry to hear about that, right? But it's the market. Having healthy pullbacks, it's okay in crypto. All right, so to wrap things up in terms of TA, resistance below 47,000, next level of support looking left. You could also use volume profile. Sometimes I like to use volume profile. So you come in here, technicals, profiles. I like visible range, but you got to adjust chart. Let's get the entire pandemic in here. Pandemic high to pandemic low. There's not much volume. See that on the daily? Not as many people trading or buying crypto right now. Let's go into just 2023 or maybe the last high we had. Right? The higher we go, like 60,000, there was not that much volume. Look at the right side here. These little bars on the side. The next major trading level 41, next level down 37. There is way a lot of open space until you get down to 30, right? And that's obviously the next physical level of support. So that's why I am closely watching that. Closely. We are still in the EMA upcross. It's great, but you can see all of the levels I just marked happen to be EMAs zones, 38, 35, or below 30. Okay. So we're still in the golden upcross, but if we have a pullback, last time it pulled back all the way down to bottom of 200 red, below 200 red. So if that happens, I'm not going to panic. Been in the market long enough to know, okay, we're getting this pullback. Now on Bitcoin on the weekly, slightly more bearish story because if you zoom in on the price, turn this off. Zoom in on the price, we had that double top, just like what? Just like NASDAQ. Just like QQQ. There's up to 60% correlation with Bitcoin and NASDAQ. So if tech companies have bad earnings in the next 2 weeks, probably Bitcoin is going to go down. Probably. To any of these EMA levels that are on the chart in the 30,000s range. Do I want it to go down myself? No. But the only good solace I could give to investors is Golden Cross, and we have the Bitcoin halving in 3 months, which historically takes 1 year for that to actually finish. In terms of the move. Okay, so I hope this really enlightens people, opens people's minds' eyes. Does that make sense? In terms of why did the Bitcoin ETF crash? Why is Bitcoin not going higher? Why is it red on the charts? Why are the altcoins going down? It's because it's relative high. All right, if you have a question about any charts, let me know now. I'm going to end in about 5 or 10 minutes approximately. And I don't really need to cover that many altcoins for myself because once I nail down total market cap and Bitcoin, then pretty much everything just follows that. So if we just go down a little more rapid fire, Ethereum still, the decoupling, okay, this particular example might not prove my case, but most of the altcoins did pull back significantly. Ethereum is different because maybe now there is this talk about Ethereum spot ETF. There's a rumor like in May or June that we might get Ethereum ETFs or Ripple ETFs. So in the long term, that could be good. And we have this trend line here. The bottom of there. I'm on a weekly chart, by the way. You can see, you draw that top side, just start to poke out of there. That's okay. That's okay. Sometimes it pulls back into the triangle at like 1900. Sometimes it breaks out, right? If it breaks out, next level, very simple, 3000. 3,000, 3,600, 4,000, just anything to what we just broke out just at 2,500. You want to see that. Are we super overbought? Not really. You get a nice reset here. I just want to watch out for that. If we go down other cryptos, let's try to go faster here. Binance Coin, almost looking like a little cup and handle, except that cup handle has to pull back harder down to 266. Looks like it's fading down like it's doing that. Solana as well. You could see hesitation right now. These are still all golden upcross, by the way, right? So it's not like it's going to suddenly dump back down to zero. It has to hold and maintain these levels. $85, $70, $50, $34, right? But we're in the uptrend right now. So what I'm hoping for is if it pulls back down to one of these EMAs, that will finally be the next level of support, and then we'll see a next leg up. The technicals need a reset, however, like all these oscillators and stuff. Cardano, fortunately, Cardano, right, has sim triangle and then lower low, lower high. That's what I'm saying. Some cryptos are very sensitive to Bitcoin pulling back. Very sensitive. So we see this lower high on Cardano, and it's not really inspiring. We still have a golden up cross, or we're in a lower high scenario on the daily chart. XRP as well. We were in this kind of sim triangle, broke bearish. Remember, I was saying, watch out for the lower high, head and shoulders bearish, lower high. It's all happening. Now, the only solace is right here at about 55 cents is maybe it's consolidating to the support level, and then we might get another rally up, right? I'm marked a lot here. But if we draw this, trying to stay optimistic for people who are still bulls, right? The support level, somewhere here in the 53 cent range. But being realistic about it. Stuck here. So weekly lower high on Ripple. That's what I'm talking about. Maybe a lower low there. AVAX, after its huge rally up, probably needs to reset here. Could pull back all the way down to 22. DOT, this is what I'm talking about. We're in Golden Cross, but then what is the price telling me? Huge head and shoulders on DOT, potentially. Sometimes head and shoulders on crypto is fake. It doesn't happen. But if this is real, 25% drop incoming to DOT. And that's going to put this Golden Cross at risk if that happens. Doge as well. This is an interesting setup because you could see it being interpreted two ways. If I'm bullish about the future, because I am, because of the halvening, we have a golden up cross. We hit the relative high, but we're pulling back to the 200 EMA. So this is the exact perfect zone right at 7700 where we need to fight. If it goes a little below, it's okay. But the price usually could be a bullish pin bar setup long term, where this thing goes up, pulls back to 200 EMA, defend the 200 EMA here, and then the next mega rally. Okay? That's the bullish scenario. Bearish scenario, you could see it's at the middle half line, heart line here, and it could pull back all the way down to 6 cents if that happens. This could fail. It would be unfortunate if this golden cross is fake and gets overturned by the bearish downturn, and then we get a death cross, then you're not going to hear me say that anymore, right? It's because EMAs are lagging indicators. I'm thinking like an investor right now. SHIB, let's use a different chart. SHIB, for example, trend line. We lost the trend line. The only thing I like is there's a potential upside down head and shoulders on SHIB. And again, this 200 EMA, if you know your moving averages on a daily, it is the critical line of support. So 892, we just dipped into that in fear last week, but bounced up. This, if it's going to bounce, you could see the mixture here. Because when you have two conflicting patterns, that's some serious divergence in the market. The only thing I'm holding on to, Golden Cross and the halvening. Because somebody could say, wait, isn't this a head and shoulders? It does look like that. It's a head and shoulders, but then there's an upside down head and shoulders at the end. So it's still bullish to me, like 55%, maybe 60% in terms of the halvening happening. So that's why I'm not panicking about this. What's going to make me change my mind is if we have a very strong downtrend and then the death cross. If we death cross on these EMAs somewhere over here in April, then I'm going to change my thinking. Let's go to, okay, let's look at the Bitcoin ETFs. Sorry, I forgot about them. So the Bitcoin ETFs, this is a common question I used to get from people is when you see a IPO or an ICO like this on a daily chart, and there's really no data except for like one or two candles. I remember Warren Buffett taught me, he said he just doesn't even do IPOs at all. So that's one strategy. You just skip it all, right? Until you have some kind of real data, which could take like a year, 6 months to a year. Most people, what they're doing playing this is they're doing day trading style. So gotta zoom in onto a multi-time frame. So you can see it's two candles, right? On a weekly, it's one. Daily is two. 4 hour, you're getting some information. 1 hour, you have a little bit of information. 15-minute, now you can see something better. 5-minute, now you can see a lot better. 15-minute, let's use 15, right? Because I can start to see, or use 1 hour. So we hit that oversold on the hourly. There's nothing on the H4 chart. 15-minute, we hit that oversold with a little bit of bullish divergence that's happening. But this is still downtrending. So again, if something's downtrending on some of these IPO, ICOs, I just say no. I don't touch it. I just say no. Now, because I know the Bitcoin price, technically what this actually looks like is this. Remember the Bitcoin chart coming like that? And then it's looking like that. In terms of we had a rally, we topped for a little bit, and then we just launched, and then it's pulling back. Okay, so it's not a random stick. It's not a random red. It's just the continuation of Bitcoin, the copy of the price. If somebody really wanted to trade that, which I don't recommend for beginners, but if you really want to know, is you have to look on the intraday, and it's death cross on the intraday. So if something's death crossed and somebody's trying to go long, that's fighting against the trend, and high chance somebody's going to lose money, right? There was the one time we had some in the beginning, the first launch morning where the EMAs were actually up crossed, and that's why it went up because everyone's like, oh, actually, this might go up. But then we had the top and the big sell-off. You have a death cross, you got to get out of there. That's why I was hands off on the Bitcoin ETF. Potential sell-off, I'm not touching that. As a trader, no way. Unless I want to short it somehow, right? Like short Bitcoin, it's possible. Right? So all of these look the same, similar. GBTC, except, GBTC is a good example, right? Bitcoin had this mega rally, they launched it, and then we're just looking at this circle for these prices, like on IBIT. ARCB, sell off. BITB, sell off with a little bit of hammer candle on the H4. Okay, I'll give it that. BTCO, sell off. Everything, sell off. Now, why is it getting hammer candles here? Because when we're probably getting a 5-minute oversold, bullish divergence play. So it's still trading volume here to be had. You can see here on the 15-minute where it's downtrending, make a lower low on the price. The RSI is making a higher low. The MACD is making a higher low on the line. And easy way is Fibonacci. Now you know your retracements. You could also do pivots here to see where you stand. If you're a trader, if you're really trying to trade this thing, which I am not, if you're really trying to do it, there are techniques. Draw a trend line on top, draw your support and resistance levels, and try to mark, psychological, where's the next level down, 24 or 23.50 if you want to go in 50-cent increments. There's a lot of ways to try and chart this thing. But for me, I'm just hands off because I'm thinking about the big picture in terms of the happening. FBTC, all the same thing, right? This is not a random shooting star. This is the top of that move of Bitcoin. And then we're pulling back from that. Same thing. DeFi has a nice little picture of that run up. These two candles, exactly perfect. All right. So again, in summary, things to watch out for crypto. Obviously, it's always about watching out for FOMO and emotions, right? But I would encourage people, whoever's watching this now or in the future, is got to take a hard look at ourselves as traders and investors for 2024. Meaning, who are you? Who am I? Am I an investor? Am I a hodler? I'm not going to include hodlers because, then we don't need to look at charts for that. So am I an investor? Am I a swing trader? Am I a day trader? Am I a scalper? Do I have a long bias? Do I have a short bias in the market? What's my maximum drawdown for this year? What's my maximum risk per position? What's my risk to reward ratio that I'm going to execute every single trade? What strategies am I using on the chart? What am I looking for to buy or sell? Those are key questions as we're launching into 2024, going into stock earnings, and then coming up to the Bitcoin halving. So just some food for thought. Again, I purposely make my stream so I don't get too emotional in any direction. And usually it kind of sounds boring or sounds flat. But that has saved me many times in this market. That's why I survived as a trader and investor for so long, is I learned how to control my emotions. I can have some emotions, right? But then got to get over it. Got to get over it. Next trade, next investment, next chart, next round of work. All right, everybody. So I hope that you learned something from this stream. Just get the ideas going in our minds as we come up into earnings season. And again, if you have any questions, if you're a beginner and you're thinking, I have no idea what this person is talking about, what is this guy talking about? Just let me know in the comments. If you have a question or chart request for next time, I check the YouTube comments. And all you have to do is type the ticker symbol and I'll analyze the chart for a minute or two for next stream. All right, everybody. So just remember, the stock market is closed for January 15, which is tomorrow at the time of the stream. And the next time I'll be on is most likely next weekend, anywhere between, I'm trying to do Sunday streams. It's because I want the week to close out. So we have a really 100% weekly close candle. If I do something on Friday, sometimes the weekly candle changes on the weekend for like crypto a little bit. So, or stocks, futures. So that's why I like to let it close. So I'm probably going to do the next stream on Sunday, January 21. All right, everybody. Hope you have a good one. Happy trading. And let's remember to just kind of execute our strategies this year and risk management. All right. Thank you, everyone. I'll see you next time. Bye-bye.